Let's welcome in our guest Avinash Gorakshakar, Director of Research at Profitmart Securities to talk more. Avinash, good afternoon and welcome to the show. Let's first pick up a Polycab. With what's happened with regards to Polycab, the stock has been seeing under pressure. Now, what can it do after the tax department has alleged 1,000 crore unaccounted sales number? Lots brewing there. What do you make out of it?
Yeah, good morning, Hiral. I think my guess is that whenever any corporate governance issue crops up for any company, the immediate knee-jerk reaction is that there is a huge bout of selling, and that is exactly what is happening in Polycab. Although the management has officially refuted the claims, whatever news flows we have got from various channels as well as news reports is that some 1,000 crores of unaccounted sales have been booked in the company's accounts. So I think now clearly the markets would like to wait for a clear management commentary post the Q3 numbers, and I think until that happens, the stock would be under pressure. The stock is heavily owned by some of the larger FIs, larger fund houses, PMSs. So I think unless a little more clarity comes in, it would be better to be a little cautious and stay away from the stock. The stock has already corrected by 20%, from its high. And I think if any clarity comes, then I think you could see a bounce back happening soon. Fundamentally, we still like the company. The business model is quite robust, but any underreporting or any kind of corporate governance is definitely not going to be liked by the market. So I think it's a hold from my side. But fresh buying, I think, should be done only when we get some clarity post the Q3 call, because that is one issue which the markets would be clearly looking at. And only then the stock will consolidate and then start moving upwards. My guess is that TCS is likely to show a sequential decline in its dollar revenue. More importantly, margins are going to be under watch. I think even if the company maintains its margins, the markets would be happy, but any decline would be considered to be a further negative for the stock. And more importantly, from the management commentary, one would like to know what are the kind of new client, which the company has bagged, what are the new orders. And typically in an election year, US is also going to be headed for elections. In an election year, typically we see that IT budgets get a little delayed. So my sense is that, maybe for the next 1 or 2 quarters, the going may not be all that great, not only for TCS, but even for Infosys. And I think management commentary in the last call, specifically Infosys, was quite negative. So I think you could expect a further, kind of negative, kind of fall in the price if the commentary is going to be cautious. Overall, I think margin pressure is going to be evident. And typically, I would say that the large caps would undermine the mid caps. I think we have been very positive on the smaller IT companies like Persistent, KPIT, where we believe, the management commentary has also been quite strong. So I think large caps would be a little, under strain. And I think the management commentary and the numbers today would clearly highlight all the points and facts and figures once, the con call details are out. But I think it's better to stay away from the large cap IT names, at least for some more time. Now, I think, Hiral, looking at the numbers, the profitability has jumped by almost 36%. And I think management commentary has also been quite encouraging. So my sense is, the stock has not outperformed the market. It has remained little low. Markets are yet, not realizing the full potential of the corporate going forward. So my sense is that one should definitely hold on. Investors who have a 12 to 18-month view can definitely look at buying on declines, considering the fact that its business model is quite scalable, it's pretty steady, cash flows are being generated in a pretty healthy manner. I would not be surprised that if you given a time period of say 12 to 18 months, this could be a strong outperformer. I think numbers are definitely much better than the street estimates, but the street has not given it a kind of a premium rating. Mostly markets would probably wait for another quarter to get some confirmation. But after that, I think the markets would definitely look at the potential, cash flow generating capacity of this company, which seems quite promising. So it's a hold, and any decline could definitely be addition to one's portfolio. No, I think Agam, Senco Gold should report reasonably good numbers. In fact, the entire jewelry space, if you ask me, has done remarkably well. If you look at Titan, you look at Kalyan Jewelers, I think the jewelry space is growing quite strongly. A lot of unorganized demand is getting shifted to the organized players. And I think Senco Gold, definitely looking at the kind of geographical reach which it has got in Eastern India, plus the kind of new footprint it plans to add, would definitely go a long way. So I think, despite the fact that the stock has moved up sharply ever since the IPO, I would believe that, the fair value could be anywhere between 900 to 950 rupees. And I think if you were to look at the longer term perspective, I think the jewelry market in India is expected to grow in double digits. And clearly, Senco has always outperformed the industry growth. So my sense is, yes, it's a hold, but any decline or any kind of correction, if it does come, should be used as an opportunity to add in your portfolio. We are positive on the jewelry sector for the next 12 to 18 months. Negative or maybe the near-term concern for Bank of India is the deposit growth, because going forward, my sense is there's going to be a war for deposits, and banks are definitely now going to find it very challenging to raise their deposit growth, considering the kind of competition within the PSU banks as well as the private sector banks. I think in terms of the bigger banks, something like a SBI, a Bank of Baroda, our sense is that these banks with a large CASA ratio could do significantly better than smaller banks, and that is where possibly the deposit growth benefit could come into these bigger players. So we are positive on SBI. We believe that any dip or even at the current level, SBI can provide a decent risk reward if somebody has a 12 to 18-month view. With the kind of corporate capex going on and plus the infra, kind of push by the government, I would not be surprised that State Bank of India looks pretty attractive. I mean, though in the near term there could be challenges on the net interest margins, but I think clearly a price of 720, 750 over the next say 12, 18 months looks possible. So I think SBI is our top pick from the PSU pack.